Hello, everyone. Welcome to today's live session. So if you haven't seen these before, let me just bring the risk warning up. So we do these every day, whenever possible, at 12:30. And it's a quick look at what's going on with the major markets, the euro, US dollar, pound, US dollar, oil, gold, and some of the major stock market indices. We have had some moves this morning. The pound, we'll have a look at it in a minute. The pound jumped about 80 points in 10 minutes or so at about 12 o'clock. I think it's off the back of something Theresa May said in Parliament today. So we've seen a bit of short-term volatility this morning. Inflation came in quite low this morning for the UK as well. But I think leaving this morning's news aside, we have seen these markets, some of the stuff we were looking at yesterday, we have seen some of these markets turn around. So it has been interesting. So I think that risk warning's been up long enough. So I think let's get started. Let me just drag this across. We'll just do a quick commercial before we start. We're doing the zero spread today. I mentioned it yesterday. So we do this, do these promotions quite regularly for clients on different markets where we have no bid offer spread on certain markets for 12 hours. And because Wednesday is oil inventories day, when the oil inventories data gets released at 3:30 in the afternoon. We're doing zero spread on oil from 9 o'clock this morning till 9 o'clock this evening. So it basically means there's no cost of trading in terms of a bid offer spread. So if you're a client, you can take advantage of that. So it's for both types of oil, Brent, the UK version, and WTI, the US version. And if you're not a client, you can go to our website, Capital.com. You can see start trading now, click on that, and you can get up and running in an account. But like I say, we do run these things quite regularly. I think we've done one of these promotions every week in recent weeks, and they seem popular with clients. So I think we'll just carry on doing them. Right, let's get started. Let's have a look. Let's have a quick look at the pound. We'll start off with FX. So a quick look at the pound, and just to show you this jump. There we go. There's the move. It was between sort of 5 to 12 and 12 o'clock today, and I think it's in relation. I think Theresa May has said to business, well, if you don't want a no Brexit deal, then a no deal Brexit, then politicians have got to vote for her deal. And I think that seems to have given the pound. You can see the rise from 28.80 through to 29.60. It's a big move, which is great, of course, if you're in. But I think this is one of the challenges of trading pound or against anything at the moment. That so much of it is clearly, as we all know, being driven by what's going on or what isn't going on with the Brexit discussions. So I think it can be a little bit tricky, and I think it reinforces the importance of having stop losses, having something in place, because you can't sit there and watch the market 24 hours, but having something in place to manage your risk. But just to pick up on what we were looking at yesterday, when we were looking at this yesterday, so we'd have been, where were we yesterday? Feb the 12th? Was it the 12th yesterday? Yeah. So we'd have been around about here yesterday, about 128.50 yesterday. And I was saying really how we were getting to a point where if the pound strength was going to come back, we were pretty much there. And again, it's a level that had been set for the pound based on previous political stuff. When we had the first of the votes back in January, was it January the 15th, I think back then, that vote where Theresa May, the UK Prime Minister, suffered that massive defeat, we saw the pound, if I just zoom in on it here, really surge on the defeat. And then after that, sort of 128.50 had been pretty big support for the market. And that has proved to be, or 128.20, sorry, 128.20, 128.25, something like that, had been big support. And I was saying yesterday, look, if it's going to turn around anywhere, then we're probably there. And we did have some strength yesterday afternoon, a bit of strength yesterday. Sold off a bit today on those inflation numbers this morning, but again, this bounced back up. So it's still a really interesting market to watch. And 128 is the big level. If we were going to pick up on the trend, maybe a slightly sharper trend than we were looking at yesterday, maybe something like that. If we took it off those highs from the end of January, the pound against the dollar has been in decline for most of February so far. So a couple of weeks we've seen the pound weaken against the US dollar. But I do wonder, because we are back to 128-ish, or we were there yesterday, are we going to see it building some sort of base down here? So I think it's a really interesting one. Again, the pound. So if it's going to bounce from anywhere, this is the place. I think if we lose 128, there's a lot of fresh air, down to 127, maybe a little bit lower, but for me at the moment, I think that's going to be the level that I'm going to be watching. So I think if we saw it after this sort of volatility in the last 40 minutes or so, if we see it drift off this afternoon, just watch to see how it reacts if we get near to these lows. Because I was saying yesterday, what was interesting, the low set on Friday or Thursday of last week, the market pushed below it this week, but we didn't have that much follow through. Pushed below it again yesterday, and again it turned around pretty quickly. So it does seem there are buyers in the low 128s for the pound. So I think that's a really interesting level to watch over the next few days. But clearly, still very much a politically driven market with 5 weeks or so left to go until we actually find out how we are going to be leaving the EU, assuming it is all going to go ahead. But 128.20, big level for the pound. Just a look at the euro as we're looking at FX. Similar, it's an interesting thing, with similar recovery in the euro. So a bit of US dollar weakness, and we were looking at the big picture for the euro yesterday, and I remember saying, well, in the past, when it's been down below 113, we've seen really sharp turnarounds. And yesterday I was saying at 12:30, but we're not really getting it today. But we did have it in the second half of the day. So yet again, we picked up on this RSI oversold yesterday. The 112, 112.20. These are the lows from November last year. They're the 2018 lows. So it's a big level for euro US dollar. So if it was going to bounce from anywhere, that was the place. And we did see bounce yesterday. So for fans of the candlestick patterns, we had a bullish engulfing pattern on the euro yesterday, suggesting this weakness is coming to an end. So again, for the euro, if we flip this over to an hourly chart, so that was the low yesterday. If we saw the euro drift off this afternoon, maybe below 113, just watch to see for strength coming back in. That for me, that would be the opportunity. If we saw it drift off, maybe if it drifts to, 112.80, 112.90, we see strength coming in. There's an argument for being a buyer with a stop loss below that low, or below that low from November. Because again, we are in the zone where if it's going to recover from anywhere, then we are here. So the pound against the dollar, euro against the dollar, very interesting markets, I think, at the moment, because we're down to these big levels. So looking to see if they can bounce back. Let's take a look at stock markets, and then we'll look at gold and oil. The Dow, we were looking at the Dow yesterday, and it was strong going into sort of a couple of hours ahead of the open. Where were we yesterday? 12th of Feb, about 12:30-ish. So we were here. I think it was 25,200 was where we were looking at yesterday. And again, a big day yesterday. I think it was up more than 300 points by the end of yesterday's session. For the official close yesterday, the Dow was up 300. This was a new high for 2019. Clearly, we're seeing the continuation in stock markets of what has been pretty much a V-shaped recovery after they got clobbered in December. And it continues. So again, it's the same as yesterday. Any weakness still looks like a buying opportunity. Weakness in stock markets, at the moment at least, is not lasting long. We're seeing buyers come back in. If we picked up on the trend from maybe the gentler trend, maybe looking at something like that, and where's that from? The 27th of December. So it gapped up when trading resumed on the 27th, sold off a bit. Those are the 27th December lows, and bang, we've just chugged merrily higher. We're what is it? 3,000 points higher now than where the market was on the 27th of December. So going into this afternoon, I mean, on the hourly chart, it's pretty overbought, as you'd expect, considering the strength we've seen. Let's just zoom in on that bit. But you can see the danger here, I think, of just using RSIs in isolation. The Dow has been overbought for the last couple of days, or the last day on an hourly chart, but it's still carried on going up. So for me, trend is far more important than any of these indicators. So some levels to watch going into today. I think the first level, if we did see the US market under some weakness, come under some pressure this afternoon, just keep an eye on yesterday's lows. It's trading at 25,500 at the moment. If we see it sell off, let's just pick up on that. I mean, it's a pretty big move yesterday, but the lows to watch from yesterday are all the way back here. So around about 25,250. So if the market does sell off, just see how it performs when it starts getting back to 25,300. But the mentality in stock markets is still very much buying the dips, and we continue to see this. Let's just flip it over to a daily. There we go. If we're looking at obvious big hurdles for the Dow, we've got highs from October ahead of 26,000, highs from November at 26,300-ish. So we've still got a bit of headroom if we're just looking solely at potential resistance levels. So still strong is the message there. Let's have a look at the Nasdaq. Where's the Nasdaq? See how that one's been doing. So let's bring that one up. We'll stick that on the daily, keep it with the daily for now. And again, if we were looking at the downtrend for the Nasdaq last year, looks something like, why is that not picking up? Am I clicking on the wrong thing? Let's try, where's the big trend line? No, it doesn't want to draw a line. Okay, our trend in the Nasdaq looks to have been broken towards the end of January. That recovery continues to chug higher. If we were looking at the trend here, we've got support coming in about 67.50, 250 points below where we are now. We've got some hurdles coming on the Nasdaq 100, 71.50, 72.50. But like the Dow, sentiment still very positive in these markets. And let's have a quick look at the German DAX. Then we'll look at gold and oil. The DAX has been interesting this morning. Let me show you why. The DAX, it does tend to do its own thing a little bit. We had the DAX had been sliding since June of last year. So it spent the last 6 months in decline of last year, of 2018, and this was despite US markets making upward progress for at least half of those last 6 months. So it does tend to do its own thing. It tends to be a pretty volatile market. But what I thought was interesting today, let's just sort of take this down step by step. Here's an hourly chart of the DAX. So we made a low February the 8th, about 10,850. Then started yesterday, gapping higher. So we had the gap there when it opened at 7 yesterday morning. We've seen a similar thing today. So it closed yesterday. So our DAX closes at 9 o'clock in the evening. So closed yesterday at 11,150. And again, it gapped higher today. You can see, hopefully you can see these gaps. So it starts trading this morning at 11,217. So it gapped about 70 points higher, and it sold off a bit. But what's interesting, I think, is where it stopped. It's sort of holding above these lows from yesterday. So in the really short term, I think the level to watch for the rest of today on the DAX is 11,120. So the lows from yesterday, the lows from a bit earlier on yesterday, the true lows from yesterday are more like 11,090. So 11,090 to 11,120 is the level to watch. But again, there was an argument to be a buyer, maybe even now be a buyer. If we think that US markets are going to continue higher this afternoon, you'd expect it to drag European markets higher, and the level to have the stop is probably the opposite side of those lows from yesterday. But it's been interesting, I think. But again, the performance by US stock markets yesterday, as expected, just continued strength. We'll take a look at gold, which has been a little bit dull, I think, in the last 24 hours. Then we'll look at oil, which hasn't been dull. So let's just pick this up. So just to remind ourselves, here's the gold chart. So, as the big picture view, as I've been talking about for a while, is that the recovery off those August lows still going. Pretty overextended up here. You know, a correction wouldn't harm the trend if we went back to 1250, even if it dropped $50 from here, gold. That recovery is still ongoing, but it's just been a little bit dull. I think when we were looking at this yesterday, would have been about here yesterday when it was about 1313, and I said, you know, clearly 1316, 1317 has been a problem over recent days. It proved to be the case again yesterday. It traded as high as 13, almost 1315, and it sold off. It's been back up again today, and it sold off again. So it's a little bit dull, gold. But in the short term, over the last week, 1300, 1302 has been providing a floor, and 1317 is the ceiling, but it's just trapped in this relatively tight sideways range. But oil woke up yesterday. Let's flip this over to a daily just to remind ourselves the big picture for oil. The big sell-off in the last quarter of last year. Since Christmas Eve, the market's been recovering. It's moved a heck of a long way. You know, it's rallied, what, 30%, which is a big move in a month. But we have had this what's known as bearish divergence building on the daily RSI. And this is where the market hits a high, RSI is overbought, fair enough. Market pushes a little bit higher. RSI just dips into overbought, but is a lower high than before. Market then, beginning of Feb, pushes a bit higher again. The RSI makes a lower high. So this is where you got the RSI is falling, but the market is going up. This is known as divergence. So it's a suggestion that the momentum is maybe running out of steam. And so far that has been the case. You know, we've seen it slide back a little bit. But I think what was interesting, and I missed it yesterday, but what was interesting, I think, were we looking at this? Yeah, just yesterday we were looking at this, the breakout of that downtrend. So we're on the hourly chart now. So the downtrend that had been in place for about a week broke out of it yesterday. And I was saying, well, a good opportunity would be if it sells off into the afternoon and we get strength coming back in. But so far we haven't had that. You know, the market has pushed higher. And I think today we do have those inventories out at 3:30 UK time today. So I think some obvious levels to watch. The lows from yesterday. The lows from yesterday are around about 52.75 a barrel. Currently trading just below 54. So about $1 below where we are now. But for me, if it sells off and we see strength coming in, could well be a buying opportunity in oil. So yeah, lots to keep an eye on. I think, you know, particularly because things seem to be on the turn. You know, the pound and the euro and oil appear to be a little bit on the turn here. So let's see what happens. I'm just watching this on another screen, and I've seen an error has come up on YouTube, but I think that's just on the other screen I'm watching here. So that's it. So I'm going to answer the questions now. A few questions have come in, but don't forget, we'll do this all again tomorrow. So to never miss out, just make sure you're subscribed by clicking the subscribe button. To take advantage of that zero spread, just go to our website. If you're not a client, go to Capital.com. You can open an account and get up and running and sort it out from there. But there's a couple of questions come in, so let me have a look at those. Canada CHX. What's CHX? Is that the Chinese currency, or is it something else? Hang on. If I put it into Google, it says it's chanium. What is chanium? Is that wonchuks? Is it a cryptocurrency? I'll have a quick look. I don't even know if we do that. But I've never heard of it before. But what's that market? Canadian dollar, no, Swiss franc. I am not familiar with CHX. If that's a crypto, I don't think that's one that we cover. We do lots of cryptos, but not that one. Let me have a quick. No, can't see that one. So can't help you with that. British American Tobacco, BATS, British American Tobacco. Here we go. This is a really interesting share. This. So someone's asking, is the downtrend finally over? This has been one of my favorites over the years until recently. because it's been look at this. It's been such a great example. I don't know how much data we've got. I think we did a share split there. We haven't covered it, but it's basically the uptrend in British American tobacco. Let me just bring this up on another screen, and I'll show you. Had been absolutely phenomenal. So let's just bring this up. It's a great advertisement for trend following. So I'll just bring this up on another platform, or a charting platform I use. There we go. There's the big long-term trend for BATs. So if you went back to 99 through to 2017, it's just gone up. Absolutely cracking sort of long-term holds. But things have changed. So let's go back onto our platform and look at what's been happening recently. So tops out around about $56 a share in June 2017. And since then, we've been in decline. And the question is the trend over? I am tempted to say no. I think it depends on how you drew your trend. You know, clearly, if we're drawing it off these highs from up here, the share price has got to break 40 plus to suggest the trend is over. It's only a couple of weeks ago it made a new low for this down move. And this is one I've been watching as well. But for me, at the moment, at least, I mean, your view may differ. There's not the urgency to be a buyer just yet. You know, the share price has halved since the summer of 2017. But I think it's interesting. You could argue, I suppose, it's a bit of a trading buy because it's breaking above the December highs around about $28 a share. You know, so you could argue it's a bit of a trading buy, maybe looking for maybe go back up to this gap, maybe, but that big trend is still down, and I'm assuming that, you know, clearly as a lot of the developed economies don't smoke as much, anywhere near as much as we used to 20-30 years ago, maybe they're taking the hit there. You know, it's similar one with Imperial Tobacco, Imperial brands, but I think for British American Tobacco, for me, it's one to still be a little bit patient. But let's see what happens. I think these shares with big trends are always interesting ones to have a look at. Right, and that's it. So there's no more questions. So we'll wrap things up there. So we'll do it all again tomorrow. So the big announcement this afternoon is that 3:30 oil inventories. So watch the oil price. We'll be back at 12:30 tomorrow to catch up with what's been going on. So to take advantage of that zero spread thing, open an account. Just go to the website, Capital.com. Any questions after this? If you're watching the recorded version of the video, just leave questions in the comments below on YouTube. I do check back to see if there's been any questions. But thanks for coming on today, and we'll do it all again tomorrow at 12:30.